All right, guys, it is now my pleasure to bring on a friend of Benzinga, the CEO of Schwazze, Justin Dye. Justin, come on out from backstage. Everyone get that round of applause going. Hey, Justin, take it away.
Great. Hi, everybody. It's cold. It's dark here, so I'm going to try to keep this brief, and we've got about 15 minutes here, so hopefully I can get your attention. If you remember really one thing today, I'd love for you to be able to pronunciate our company's name. So if you remember one thing, Schwazze rhymes with the Wizard of Oz. So if you take one thing from the presentation, that would be great. So anyways, I'm glad to be here. Appreciate the opportunity. We're excited about to talk about Colorado as well as talk about Schwazze, our company. We've got great operating momentum, and we're really excited about where we're headed, and appreciate those investors and team members that are online watching our presentation today. So thank you. So our vision, we really want to be the number one player in the states where we operate. So today we're in Colorado. If and when we move to another state, our goal would be to be number one from a vertical integration standpoint. We've laid out the foundation and built good fundamentals around how we want to acquire businesses, the multiple paid, how we do due diligence, how we underwrite the business, how we drive synergies, and then how we integrate those businesses. And we care about the quality of our products, and obviously we want to work with great vendor partners for consciously sourced brands and stand for the highest quality. And then we want to give back. This is a great opportunity. It's a great platform in cannabis to be able to do some real good things for the community and for certain causes. And, it's exciting to be able to do that with this platform. So our value proposition. So we really want to build the leading number one vertically integrated business and become probably a regional operator with multi-states over time. We are one of the fastest growing single state operators. Today we have 17 dispensaries under the Starbuds banner, and then we have 2 more on the way with our Drift acquisition. We're building a house of brands. We're always going to partner with very good manufacturing partners on the branded side, but we'll also develop our own products for our stores in the wholesale market. And it really starts with our team and our people. Really proud of the team that we've assembled. They bring great cannabis expertise. They bring great entrepreneurial experience. We have good executives that bring CPG, tech, large Fortune 500 experiences as well. And then we're really driven around fundamentals. So what does a store look like? What does good look like? How do we look from an in-stock position? How does our service? What's the quality of the product? And being able to do that not only at retail, but to be able to do that through your supply chain. So manufacturing, distribution, cultivation, and be able to launch really good brands and really spend time thinking about where the customer is today, as well as where they're headed. So we're excited about where we're going. We've been very active. So if you look at it from a growth perspective, we've acquired a number of businesses, really high quality, profitable businesses. And the team's done a really nice job at getting those integrated. So we've all of our dispensaries are on one point of sale system. We sit on one ERP system. We have one version of the truth, so we can look at data. We can look at profitability by product. We have good costing systems, and that's important. And we've got we really got a robust pipeline for growth in terms of single store acquisition targets, as well as larger M&A, as well as organic growth. Our team, it starts with their people. We have really a strong team at store level, all the way through our manufacturing capabilities, cultivation, and they've done a really nice job getting through the pandemic. We're led by Nancy Huber, who's our CFO, who's in the back of the room. Hi, Nancy. Who's done a great job on the finance side. Todd Williams, who brings acquisition experience from Albertsons, where we grew that business from 192 stores to 2,400 stores. And then Nirup Krishnamurthy had C-level positions with United Airlines, with Northern Trust, A&P Supermarkets, which is where I met him. And Dan Pabon is our general counsel. Dan was in the House of Representatives in Colorado and really led the regulation writing process for Colorado, which has proven to be very sound. Who we are, headquartered in Denver, representing the great state of Colorado, which is a great state. We're still seeing growth there. We have 19 retail locations. We have 55,000 square feet of indoor. We just recently bought an outdoor farm that we're very excited about, Southern Colorado growers, 35 acres. And then we're building hoop houses for our flower and biomass needs. We have in Purple Bees, which is our manufacturing business, we have 7,000 square feet, which is our manufacturing campus today, with the ability to expand that in Pueblo. And if you look at the midpoint of our range that we've given, it's 118 million of revenue, 33 million of EBITDA. We have a market cap of about $300 million, depending on where the stock trades, and we're trading about 10 times EBITDA, which we think is undervalued with where we're headed. So if you look at it from a peer perspective and where we're trading, you can see us on the right-hand side, the green bar here, where we're trading about 10 times, and you can see versus regional MSOs as well as single state operators, we trade at a discount. And we think we're going to continue to operate, take care of customers, compete really hard in the states that we're in, and we think that'll continue to grow as we continue to put up good numbers and execute. Here you can see our enterprise value is about $300 million, market cap 265, net debt. If you look at it, we've got about $21 million of cash on the balance sheet, so we've about $33, $34 million of net debt. So we've got a good solid balance sheet. We have two analysts. I was with one of them last night, Joe Gomes from Noble, and then John DeCourcy at Viridian covers us today. We hope to have more coverage as we go. Financial review. So if you look at pro forma revenue, we've grown every year. Our recent quarter, we grew at north of 400% on a like-to-like basis. And you can see where the blue part of that is our range. And then adjusted EBITDA, we are looking at between 30 and 36 is the guidance that we have. And generating free cash flow from operations, and we're going to continue to do that. We've got great, really good momentum. The team's done a good job. Q2 performance, you can see really the takeaway from this slide is we generate about 33% EBITDA margins today, and we really don't have our own products in our supply chain today. So we just recently bought one grow in southern part of Colorado, as well as we've announced we're buying another one. So we should see margin appreciation, as well as an opportunity to play offense with strains and have great assortment in our stores. And I think, for those of you that have spent time with us, I think our general view is we'd like to be about 50% of our own flower needs and 50% partnering with really high quality growers in Colorado that give us great assortment. We have lots of diversity with strains. For instance, one of our stores has 70 strains of flower, and our customers want that type of assortment from Starbuds. We've done, we're really proud of these numbers. Not only did we handle the pandemic, we had a big bump last year. Some months we've been cycling 50% identical sales. And not only have we kept that, but we've been able to grow on top of that, which is kudos to all of our team. And we appreciate our customers taking care of us. You can see we outperformed the market by 16% when you look at it on a growth basis, with Colorado growing about 8% year to date. Retail sales, we grew at 38% on an identical basis, Q1. Q2, we grew at 16%. Our customer visits, so a number of traffic, how many customers we see every week, was up 15%, 8% for Q1, Q2 respectively. And then we're also seeing an increase in the ticket or the basket size, so the invoice per customer. through promotions and better assortment and some of the things we're doing at retail. And I think where this is headed, if you look at our strategy, one was we really wanted to get out and have distribution. What does that mean? We wanted to get out and have a number of dispensaries, retail outlets, so we have shelf space and we can really listen to the customer, understand where the customer's going on the consumer side, and then be able to meet those needs. So our growing list of brands includes Starbuds, which is our Main Street brand on the banner side, outside of our stores in Colorado. Purple Bees, which is the leading distillate manufacturer in the state with between 20 and 25% share of customers. Success Nutrients is our premium line of indoor growing medium that we use in our grows, and we sell that across the country and in North America. 3 Alight, which is the next one, is our proprietary SOPs around growing. And we actually derive, which is interesting, we actually derive the name Schwazze, which is the technique of defoliating the plant, pulling leaves off, so you build a better trunk structure to get more nutrients to the flower so you can produce your yield and get to 3 pounds of light or better than that. And then Big Tomatoes, our hydroponics business that has been as an original fixture in Colorado, continues to grow and do well, and they've done a nice job with that. Colorado, it's, if you look at it, we're the second largest cannabis state in the country. We continue to see good growth there, still very fragmented. So if you look at the number of operators there, the top players only control about 10% of the market there. So there is a lot more room for opportunities to grow and to acquire. You look at our outlook. So let's take Colorado. It's a great state to operate, gets overlooked quite a bit, which is fine from our perspective because we're focused on it. Population, almost 6 million people. It's a growing state. You have good population increases and growth there. Tourism is alive and well post-pandemic. State GDP is 16th in the country. Medical was legalized in 2008 and rec in 2014, which many of you know. So the business has been around for some time and has seen the boom and bust cycles of how these cannabis markets develop. Total dispensary counts about 800 in the state. Cultivation licenses, there's about 400, so very fragmented to this day. And the market continues to grow, and we're starting to see more and more consolidation in the market. On the left here, you can see where our stores are. So today we're in Denver. We're in a few of the suburbs. We have a good presence in the southeast, but we want stores in every corner of the state, and we've got a lot of growth with the opportunity to grow. Our success strategy, once again, is be great at retail, be able to teach and train our people, our bud tenders, our store managers. Here's what good looks like. Here's what a full store looks like. Here's what we want to do from a category management standpoint. Here's what we want to do from a pricing and a promotional standpoint. And then work on supply chain efficiencies. So continue to drive cost out, and quality in terms of cultivation, manufacturing, distribution. And then the holy grail is we start introducing brands that satisfy the needs of consumers, in addition to still carrying great brands from our supply partners. But we think that's a great opportunity as we build brands and have shelf space to do that. So the investment opportunity for those out there that are investors, thank you. Thank you for your support and getting us through the pandemic. I'm really proud of the team. We think we've got great operating momentum, and both operationally continuing to grow as well as organic growth and acquisitions. We're positioned to be a strong regional player, first Colorado, and we'll continue to take that strategy and go very, very deep in the states we want to be. And to be clear, we want to be number one in the states where we operate and build very good share there. Leadership, we've got a great team. Nothing makes us more proud than when we acquire a business and those folks that have come through cannabis and been in the cannabis industry, and we have the opportunity to promote them so they can get into category management, running a category, whether it be vapes or edibles for us, or moving them to running a store or running a facility and teaching them budgeting, working through how we want to go to market, how we price, how we promote, how we merchandise, what a good store looks like every day, 7 days a week, and how we take care of our bud tenders and folks at retail. We're aggressive. We're going to continue to grow, but we'll still be very disciplined around our transaction structure and what we pay, and continue to drive our playbook and building a house of brands. And we have a great opportunity for cannabis. It's an industry we love. I think the category is going to continue to grow. There is an awful lot of good it can do for people, whether it be anxiety, whether it be pain, whether it be sleep, and a number of other things that we'll explore and innovate around. But it's a terrific industry. It's why you guys are all here, and we're excited about doing our part here in Colorado. And we've got a great state. We're going to continue to work at it. And with that, we'll take some questions. Thanks for your time.
Hey, Justin, great presentation. What makes Schwazze stand out from all of the other companies vying for attention in this space, in your opinion, at this time?
Well, great questions. There's some great companies in Colorado. There's great companies throughout the cannabis industry that we admire. I think what we're focused on really is being really fundamentally sound, running really good operations, knowing our numbers, being able to drive customer loyalty, both on the wholesale side as well on the customer side. So I think rolling out our playbook, knowing how we want to merchandise, how we want to run stores, what a good supply chain looks like from a cost and quality perspective, and continue to work on lean manufacturing principles and taking noise out of the system and working with our supply partners to do that, to make it more efficient for our ultimate consumer. I think that's where we spend a lot of time. I think you couple that with our inquisitive nature from a growth perspective, which we've built a very good M&A team. We've built a good real estate team. We've got people that do due diligence and do integration and drive synergies for us. So we're set up to scale. I think that makes us unique.
Hi, just quick question in terms of brands, whether it's your own or others. What are you looking to do on the beverage side?
Great question. I think beverages certainly is a new growing category. We certainly have had conversations with beverage manufacturers. I think it's a little bit early, so we would certainly look to partner right now and bring those types of beverages into our stores and continue to let it grow a little bit. But I think it's one of those categories that's going to grow quickly. But we have other categories that we think need to be addressed from our own production, our own capability standpoint, our own brands. And I think that would be something down the road. But we're high on beverages. I just think it's a little early for us. Yeah.
Justin, what is the final goal for the company?
We want to build a really great company that we have great energy. We're really proud of it. We do things the right way. Obviously, we want our employees, our team members to have great opportunities from a career standpoint. I mean that's part of what I get jazzed about, is growing people and giving them great opportunities. That's why I'm doing what I'm doing here. And we want to be, I think you got to be number one at something. So we want to be number one and build a number one company in our markets, as measured by sales, as measured by margin, as measured by customer satisfaction. And, I think that's a great challenge. So I think you could see us in multiple states in the Southwest over time. And I think you can see us be a regional. In the near term, we don't have any interest being across the country. We want to go deep. I've only got so much time. We've only got so much capital. We want to be focused and really drive execution.
All right, Justin, as a final remark, what do you have on the roadmap that investors should be most attuned to for the future?
I think from where our next quarter's coming up. So on the earnings side, I think we'll continue to work on our momentum of driving profitable growth, continue to take market share, continue to generate free cash flow. And I think, pay attention. We're very inquisitive. Our M&A pipeline is very healthy. So I think just be in touch with that. We'll have some announcements. We expect to have announcements in the future.
All right, that's exciting.
Awesome.
Justin
Thank you, everybody. I
everyone.
appreciate your time. Thanks.
Thanks, Justin. That was Schwazze CEO Justin Dye.